Good morning, traders and investors. So I have to ask the question, are you still password sharing your Netflix? Love to hear about it in the chat. Tesla, margins is what we'll be talking about today. IBM, Apple, could there be another chat GPT on the way? We'll talk all about it. And of course, we'll take a look into the airlines. We'll talk all about Johnson & Johnson. We got, of course, Marc Chaikin in the house as we get, of course, to Marc Chaikin. And we'll see what kind of tech stocks he brings up in his interview today, 8:15. And then we'll take a look, of course. There's some other stocks coming in here. DA Horton, Fifth Third, Discover, Newmont, and who's a Brave fan out there? Let me know in the chat. Any Atlanta Brave fans in the chat there? And of course, we'll take a look as Barbie comes out tomorrow, and there's some more out there. Initial jobless claims at 8:30. It seems like we got ourselves a full docket today. Let's get right to the action. It's pre-market prep. Rise and shine, team. Let's get after it. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elkanin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day. All right, team. So it looks like the SPY slightly down here and nowhere near as what we thought we would get hit with, especially with the earnings reports. Let's take a look. The Qs are down, of course, a little bit more, leaking with some of these tech stocks coming in with the earnings. Not so great. We'll talk a little bit about that coming up here. TLT taking a little bit of a pull back after yesterday's run there towards the 103s. Really starting to recover a little bit there on the daily. We'll see what happens in gold. Gold seems like it's holding in here, could take the next leg. And then we talk about oil. Oil seems to be starting to get going here. I'm keeping a close eye on it. Saw WTI trading around 75.68. Will we get back into the 76 handle? That's what I'll be watching today. Maybe take some oil trades. I have been looking for oil to maybe get a little bit to the upside. We'll see what happens there. Silver hanging in there also. And of course, Bitcoin getting a little bit of a lift as of late. We'll see what happens on Bitcoin. Can it keep going higher? Keeping an eye on stocks like Mara and Riot like that. They could keep going. We'll find out what happens in those Bitcoin names. But let's go ahead. Let's get out of the overall talk. Let's bring on Dennis Dick here, and let's talk about what happened yesterday. And, of course, what happened in the overnight action, as it seems like we're in another rotation station.
I mean, let's just talk about what's happened last night here. And you have, we'll just summarize it all, and then we'll get into the details on all these reports. But you have Netflix, which actually had an okay report, but the stock gets hammered. You have Tesla, which was holding up, and then the conference call happens and the stock gets hammered. And you have the Qs getting bashed, every tech stock getting hit hard last night. And and then you start seeing it go across the board and they start hitting all stocks. Yeah. Well, what has happened here this morning? They're like, oh, wait a second. We don't just sell stocks, though. If we're going to sell tech stocks, we've got to buy something else. So you've got the banks showing continued strength, which they've been building on. The IWM is up substantially here. And there's another, obviously, rotation, the value trade. So they're like, well, we're not going to buy tech. We're going to buy value. And that's the way it's going to be. And this market just has unbelievable rotation that holds it up. If you're a bear and you see Netflix last night down 40 points and Tesla down 15, and those have already bounced from the lows. But if you saw that last night and you said the S&Ps are going to be down 4 points, you'd be like, well, that doesn't even make any sense. Of course it's going to be down more than that. Nope. The rotation, absolutely incredible. Bulls continue to remain in charge. And if you are a bear, you have got to be massively disappointed to come in and see the S&P down 4 points here. This is problems for the bears.
Well, I can tell you at least I'm in that bear camp a little bit, Dennis. I didn't go and short Tesla or Netflix, but I played a little SQQQ overnight, and that's just because I was thinking that maybe we get a little bit of a hit, little leak. It was just an overnight swing. It's not that I
Sure.
think that we're gonna destroy the Qs today, but I thought we could get at least some pullback because I looked at that like Qs daily chart and I could see it pretty extended away from the 9 EMA, and a lot of times we're getting these little moves up, couple days green, and then a couple of days pullback. And it doesn't mean that we're gonna crack here. Sorry with my camera. It's having some issues with the battery this morning,
Oh,
but I'll get it right back up. At least you still have my audio. Just give me a
yeah, we got
second
your
here.
audio.
But yeah, just going to be watching the Qs, especially today, to see if we do see a continued leak. But I see it the same way you see it, Dennis. The rotation is wicked. The
Wicked.
financials getting strong again.
Yeah.
Industrials are strong. If energy can come and lift again, it just seems like even though when we get a hit on technology, the other sectors just continue
Pick
to
up the
rise.
slack.
Yep.
Yeah, it's tough. It's tough to be a bear. It's tough to, look at this, coming in today and saying, wow, they just don't care. And then you wonder if they don't just come in and buy the dip at Netflix anyways. I mean, they already have started. So let's bring us into that specific report. It was the first one that reported last night. The numbers were decent. We knew the bar was going to be high. We knew, it had the pre-earnings run, which was an excellent trade for anybody who took it. But obviously earnings are always a crapshoot. We talked about the bar being higher because it had run so far up into earnings. Give us those numbers here, Mitch. The numbers are actually decent.
Yeah, the numbers are actually decent. They did beat expectations. Q2 EPS at $3.29 beat the $2.85 estimate. Sales at 8.19 billion missed the 8.29 billion estimate. Then when you look at the global streaming paid memberships, they were up 8% year over year. So that's not looking too bad. Net additions at 5.89 million over the expectations here. Now, where you start to see things that came into issues were when they started looking at their forward guidance. So forward guidance was not lower on EPS, but on revenue, a little light at 8.52 billion versus 8.68 estimate. And why are they doing this hit on revenue? Well, they expect to see a little bit of some revenue growth, but also seeing a little bit of a hit, of course, from the strike that's going on right now, especially due to the timing of the production starts that were ongoing right now with the strikes. That's going to be affecting the revenue a little bit here. But they did do a couple of things that they're confirming here. They removed its basic ad-free plan, making the standard plan with ads its cheapest option a month, $6.99, and the standard and premium tiers without commercials costing $15.49 and $19.99 respectively. Also mentions, of course, of the curve password sharing gaining steam, and one thing to keep in mind: advertising revenue growing here.
I mean, I think lots of good things to see from this quarter. I think it's just the fact that the bar was too high. I do believe this dip is going to get bought here in Netflix. I'm not long the stock. But am I looking to buy the stock? I don't know. I mean, it's 50 times earnings. So I mean, it's just kind of run too far for me. I was long it when it was 17 times earnings and 20 times earnings. It got to 32 times earnings. I was like, well, it's getting a little stretched. Nice. And now it's obviously just continued. I've said it can grow into this valuation. I believe that too. I think Netflix is a buy on pullbacks, but I'm probably not doing it myself just because it's so stretched. But let's look here. It's already been bought. If we look at that after hours chart here, Mitch, we were down about 433 last night, I believe. If we get the lows, 435. I don't know if you have it.
I have 430.25 as the low in the
430
overnight
we got
action.
down to last night. So we're already 450. So we've already got half the losses back from last night. So, I mean, dip buyers already emerging here. It's going to be hard to shake the dip buyers in this. I don't think this is one that's going to turn around and roll over and go down 50. I think dip buyers emerge. I think eventually we look at Netflix and it's probably back up at the highs. I don't think that's happening here today because it's been pretty hammered all day. But I do think when we look at this, if the market continues higher, Netflix will be back up there too.
Yeah, and I think, it's been on a run. It pulled back towards support. I think it could catch some support, catch some dip buyers here in the 440s. I was literally talking about it yesterday before the market closed. I was thinking, 460 pullback on Netflix wouldn't
Yeah.
be bad already. And it went a little lower than that. So now I can just watch to see, can we reclaim 460? We'll see what happens there, because I do think it was on its way to 500. I mean, we were seeing that it was definitely on its way. Now it's just going to be more of a matter, can it catch some dip buyers here and get it back up? One thing that I definitely think that will be helping them in the future is as they start to focus more and more on that advertising revenue. If they're really truly able to get a spike there, that's going to help them completely, right? And that's going to give them a nice little lift in their revenue. So I know that they are struggling a little bit with some labor issues because of the strikes, but I don't think that's going to really affect them on a negative. They did say that they have lower cash content spend in 23 than originally anticipated because, of course, the strike. So that should even help them, if anything.
It strikes temporary too. I mean, people are looking, at the thing longer term, and
Yeah, it's not going to
everything
be.
is trending right in Netflix here. They're doing everything right. As much as Disney has done everything wrong, Netflix has done everything right. So I like the stock, I like the company, but it's just the valuation still too stretched for me. I'd love more of a pullback, like 400 ish. Yeah, maybe we're talking, but again, I just can't bring myself to pay 50 times earnings, so I'm out of it for now.
And we'll see what happens, of course, with that basic ad-free plan. They still haven't given us some really good numbers and haven't released the numbers on that. They said that they're going to, but that it's still too fresh of a product to let us know. Let's
Let's go
move
to
over to
let's
Tesla
go
here.
Tesla.
Of course, Tesla coming in, and the focus, I think, is just going to be shifting more and more into the margins because deliveries weren't bad here. Let's talk about the earnings here. Q2 EPS 91 cent beat the 82 cent estimate. Sales at 24.93 billion beat the 24.48 billion estimate. Total production was up 86% year over year. Total deliveries were up 83% year over year. Now, operating margin 9.6% down from 14.6% year over year. And then, of course, citing ASP due to price and mixing getting hit, cost of production ramp from the 4680 cells, and increasing OPEX drive by the Cybertruck AI and negative FX impact. There's a lot of things that are affecting Tesla right now as they keep trying to ramp up production. Also, for that 46080 cell battery, they did increase the production by 80% in Q2, but that's definitely affecting their vehicle margin here as they, of course, make a more expensive battery, which hits them on their margin.
Same exact story applies to Tesla. It had run up significantly into the report. The bar was very high. The numbers were fine. But again, just this high bar holding it back, and the valuation is stretched. So you might as well call these two peas in a pod here. Same story. Same story has happened after hours. We've seen them, sell off significantly, but the dip is starting to get bought. Tesla, I believe, was down to 275. So you're already 5 to 6 points off the lows. So again, buy the dippers emerging. It's going to be hard to shake those institutional money managers that have missed the boat. They're looking for any dip on any major name to buy. And I think that's going to apply to Tesla as well. I don't think Tesla's going to roll over and go down 40 points. It's just not the market we're in. We're in the full FOMO market here right now. Dips getting bought.
One thing that I'd mentioned about Tesla is that there was a mention on the earnings call. Elon Musk said that the electric vehicle giant is in early discussions to license full self-driving to maybe one of the major automakers. That could be a massive move for Tesla, right? That could definitely bring in and help some of these margins. But I do think that we got to really start focusing on these margins because they're definitely going to make an impact on Tesla in the future. I don't think it's going to be affecting Tesla in this current environment. We're too much in the bull market, exuberance type of environment. But if we ever start coming back into, kind of the headwinds and really start getting hit, I think that you're going to start seeing Tesla take a little bit of a hit on their valuation as you see legacy automakers still starting to come in and margins going down for Tesla.
But we can sit here like a Dan Nathan and sit here and just keep, saying about, the valuations are stretched and, yeah, it doesn't make any sense. But we know from 2020, if you sit there as a trader and you continue to give these arguments, you're going to, really struggle in these environments where stocks become disconnected from fundamentals. Is there a point in time where we're going to show weakness in some of these stocks again? Sure. But I mean, trying to predict that at this point in time, we could have said it a month ago or 2 months ago, and 3 months ago we were saying it, and they just continue to go higher. So as a bear, you've got to capitulate at a certain point in time, and as a bull, you're loving it. I've kind of been market neutral because of all those arguments that you just gave, and I'm like, I can't bring myself to do stuff. So I'm still trading kind of market neutral without this full bias here, but I'm buying dips on strong stocks because you know what? That's what continues to work.
We'll see what happens there in Tesla. Let's get out of that conversation. Let's go to our guest today. It's time for a little bit of Marc Chaikin. You guys smash the like. Let's get to it. All right, Marc Chaikin, founder of Chaikin Analytics. How are we doing today, Marc?
We're doing well, doing very well. And I second the motion of Dennis Dick.
Yeah.
Which part?
Yeah, which part, right?
Me as a being?
I second Dennis also. I'll tell you that much.
It's hard to be a bear in a market that's grinding higher.
It is.
Yeah, the exuberance in this market has definitely stayed in it. And we talked about it today. Dennis talking about that rotation that he keeps seeing.
Yeah.
Even when tech goes down, the rotation just going to the other sectors. What are you seeing, Marc?
Well, I'm seeing the breakout in the airline stocks as indicative of what the economy is really doing. The early stages of a bull market are basically the wall of worry climb because people sold out near the bottom or they got bearish on the first little rally. And that feeds on itself. It just fuels a slow grind. Again, this is not necessarily a blow off. I don't think it's a blow off. I don't think the valuations are necessarily high. I think the major houses like Morgan Stanley, Goldman Sachs, JP Morgan were way behind the curve. When you still have Mike Wilson looking for 3,000 on the S&P, you know that the earnings estimates at some of these firms for the S&P are very low. So now you're starting to see some people looking at better earnings estimates based on this current earnings season, which has been a barn burner. Except for Tesla and Netflix, there's barely a stock to fret over.
No,
so,
it's been that, Marc, and we were talking about this just even before the Netflix and Tesla report, and I was making this argument that, hey, we're so dang bullish, it's probably an argument to be long almost every stock going into, like if you were just decide every single stock reports, I'm going to be long it. And I'm just going to play that strategy. And I think it would have worked last quarter too. Just going to buy every stock into the report. The ones that go up, go up. The ones that go down, the dips off and get bought. So, I mean, there's alpha to extract from just being long stocks.
Well, and if you're long tech stocks, and we've talked about this, and it's not my concept, it's this guy, Ophir Gottlieb out of Chicago.
Yeah, we know.
Options trader.
Yep.
So, tech stocks tend to see implied volatility go up in anticipation of earnings in that 2-week window. And you don't have to stay through earnings. If the power gauge is bullish, I will stay through the earnings report and look to sell the spike here. Mitch asked if I wanted to present. I've not done this here. Can I just show, show two charts? Let's see.
Yeah,
so it's as simple as clicking the button.
You click the button, you'll see share screen, and then there's two options, just Windows or share the whole screen, and you'll see it at the top tab. And then that way you can just share a screen there for us.
Share screen right there.
Boom, boom. I'm trying to bring a little extra for us here, like always, guys. And Marc going to bring in a little bit of the power gauge.
Entire screen. Okay.
Man, my camera today.
There's a lot of clicking today. Are we getting anywhere?
Oh, we're gonna get somewhere. There you go. Did you get it presented there, Marc?
I see entire screen. Share.
Should be able to show just the
there you go.
Window too. If you want. Whatever you want to show.
Let's see it. Okay, so I want to show two charts. First, the SPY. This is Chaikin Analytics. I don't know that we've ever showed this on the screen. So
awesome.
There you go. Let's do it, guys. Smash the like.
We read the chart from the bottom up.
All right.
Why? Because the power gauge ribbon is there. So you can see that the power gauge turned bullish
Oh,
in
nice.
mid-March. But more importantly, the SPY started outperforming the 3,000 stocks in the Russell. And then right here is Chaikin Money Flow. And what you see is since January, you've had 6 days of negative money flow. Remember, this is an oscillator. It's supposed to go below zero like it did back in September and October. What does this tell me? Persistent accumulation in the large cap index. And then we go up to the top of the chart. And where are we finding support? 21-day exponential average, which is a logical place for a strong market to find support. So where is that now? It's about 4450 on the S&P. It's 4415 on the SPY. That implies that the only kind of pullbacks you're going to get are 1.5% to 3%. So down to a rising 21-day average. Now let's look at to the left, and you see all the stocks in the S&P ranked by power gauge. But the number that's key is what we call our power bar. 183 stocks with bullish ratings. That's pretty much the max you can get. Only 69 with bearish ratings.
247 neutral. What's number one? Did they rank them like which?
No, they rank them in buckets.
Buckets.
But number one is software and also semis. There's no question about it.
Which isn't surprising.
And this is alphabetical. But what I find interesting is that there are names on here that we don't talk about. General Motors.
Yeah.
Ranger. The hardware stocks. But let's look at one stock because I think it's indicative of what you were just talking about. Salesforce.com. They reported a big positive earnings surprise twice, actually. Right here in February, preceded by one of our buy signals. Big spike up, pull back to the 21. This time it was a little different. Spike up on earnings, and then you went sideways for 3 weeks. Well, you know what that'll do to a trader. That's basically, okay, this is dead money. Let's get out of it. Nope. In a bull market, you get analysts raising their estimates. You get analysts raising their price targets. Occasionally along the way, you get a guy who downgrades it based on price. So you get it from a buy to a hold. Those are typically great buying opportunities. We saw that in Fortinet, where someone downgraded it strictly on a price basis. So I think there's a pattern that's very predictable in bull markets where analysts who are behind the curve try and follow the leader and catch up, raise their estimates, or whole sectors. Morgan Stanley upgraded solar 3 days ago.
Yeah, and then that blasts off.
Yeah, a couple of weeks before they upgraded cyber, about a month before. So there are waves of upgrades and there are waves of buy recommendations in a bull market. It always ends, but trying to pick the end of a bull market is the most thankless task on the planet.
What this power gauge, and if you just scroll through those names, like, I don't know if selective perception on my part, but like you were saying, I see a lot of names that you really haven't thought about in this bull. And so it looks like there's a catch-up trade happening to me here when I'm looking at these names. You know, Marriott's in there now. Yep. You're starting to see, like you said, Hewlett Packard, Grainger. Yeah. Lennar has been there. We know.
Yeah, Lennar has been. Yeah, but then let's look at Lennar because we all loved Lennar this year. But now you got that extension where Horton just spiked up 10% for no particular reason. I'm sure it was an analyst upgrade. But there are names here. Now, these are the very bullish names. So there is more of the names you would typically know. But even stocks like PACCAR, Palo Alto, which had that great buying opportunity when Microsoft came out with what was perceived to be a competing product. It's just across the board. You've just got really good names. And then you get into the American Airlines of the world, the Archer Daniels. What's lagging here is pharma, energy, financials. And that's why you still have some skeptics left in the market who are looking at the breadth numbers and saying, oh, no, you know, that we're not showing those robust new high numbers that people like to see confirm a bull market. That's yesterday's bull market. This is a very compartmentalized and segmented bull market. The good news is we sort of put a ring fence around the financials during the March crisis. And the market made a decision that that wasn't going to derail the
The bull.
uptrend, the
Yeah.
bull.
Yeah.
And that was really, that's the key. That and you know, if you look at, okay, what could go wrong? Yeah, we could have another financial crisis based on real estate credit. The earnings come in lighter than expected. That's not happening. Or what? I mean, I don't see what changes the picture right now, which is why you're going to start seeing some people raise their year-end price targets at the major firms.
Yeah, definitely. I mean, I know that for the beginning of the year, if you would have said all-time highs, I think everyone would have been looking at you a little bit strange. And now it's definitely seeming in reach. Mark, do you think we reached that this year?
I do. I think 4,800 to 5,200 is my year-end target. My target for July was 4,600. We're there. And you know, you guys are the only ones who get those targets in real time. I publish a monthly market letter, but you know, you get them twice a month and in real time. But I just wanted to highlight one more chart.
Yeah, of course. You always bring us some charts that we might not be watching. So what are you looking at today, Mark?
Bank of New York turned bullish in the power gauge right at the bottom of the chart just 3 days ago. A great earnings report. Not great, but better than expected. And you're going to start seeing more of that at the major banks. Well, what does that tell me? It tells me breadth is going to improve. Eventually, it'll spill over to the better regionals like Ozark. That hasn't happened yet, although Ozark's 25% off its low.
Yeah.
So across the board, you've got names, as Dennis pointed out, that we don't normally talk about. Caesar. I mean, Caesar making a new 52-week high. Yeah, and the airlines. You talk to
in a week. I mean,
what
really
recession?
In a week and a half.
Yeah, you talk to anybody who's traveling, and they say it's a zoo. Whether it's Italy, Las Vegas.
Yeah.
In spite of the temperatures.
Yeah.
The consumer is spending.
The only place they're not going is Disney World.
Yeah, the only place they're not going.
There you go. I'm just looking for names as I scroll down. You know, this is what I do all day. People say, well, how do you follow all this stuff? It's just so easy.
It's a nice system. I mean, I love the, you know, when you get it simplified like that and you're looking at it. I believe that is the first time you've shown it too. We talk about Chaikin Analytics all the time, so it's nice to actually see it.
Well, you have Mitch to thank for that. He said, hey, if you feel like sharing a chart, that's great.
Yeah, you should have been sharing this years ago.
I know.
That's what I love to see. I mean, if you guys want to check out Chaikin Analytics for yourself, I threw up the link there for you guys to go ahead and check it out. Definitely click that link, and you guys saw that dashboard. I'll tell you one thing, Mark. I really like the coloring, the UI there. It seemed really good to check it out there. I love, you know, you using RSI. So appreciate you like always, Marc Chaikin. You guys check out, of course, founder of Chaikin Analytics. And like always, you got to bring us a nice little discount code next time, Mark.
I will. But let's do one more thing before we go.
Sure.
Give me tell me your favorite stock right now. And we'll
favorite stock.
Just pick a stock.
Hilton.
HLT. All right. Our discovery engine.
I'm not ready for this.
Our discovery engine is going to find stocks with similar characteristics.
What? So I like this. I'll put this
Hilton's a large cap stock with strong earnings consistency at or near its high. So here are the so these are all in the hotel, restaurant, and leisure. So Arco, Booking, Bloomin', Boyd's.
Yeah, I like Booking right now.
Carnival.
Expedia and stocks like that. Why not, right?
Let's look at Arco because it's a name you don't normally focus on. It's not got a big market cap. It's only 2.2 billion. But these are stocks that are showing you that all is well in the world.
Yeah. At least I don't think the recession concerns out there are driving the boat anymore. That's for sure.
This is a McDonald's franchisee.
That's what it's all about. I appreciate you coming on, Mark. We're going to let you go as we get jobless claims to hit here in about a minute. Always good to have you, Marc Chaikin. You guys give him a nice little follow. Also in the description below, you'll see his Twitter. Give him a good follow. We'll see you like always, Mark. Have you back next week.
Thanks, guys.
Take care.
Thanks, Mark.
Trade them up.
All right, let's get back to the market. My camera did go down. I'm having some issues with it. I'll let you guys know. I'll just stay like this so that I don't have to worry about it all the whole show. Initial jobless claims consensus is 242,000, prior 237,000. We'll see what happens when this hits. Of course, I'm not expecting the biggest reaction, but I just wanted to make sure that we were watching it as it hit the tape here. We'll see what happens if the SPY does get a little bit of a leak here.
And the SPY is holding up very well. People can come in, oh, it's a weekday. I mean, we're down 8 handles here or 7 handles here now. I mean, this is a 10 if you're killing fair value. I'm just looking at it without fair value, but 10 points. But I mean, this is held up very well today with Netflix being down as much as it is, with Tesla being down as much as it is. With the tech wreck we've got, chips are down significantly. There's basically a tech wreck happening here. And, you know, even Nvidia is down, which is never seems to be down. It's down $4. I mean, market holding up well. The reason for that is the rotation. It's just, you know, oil stocks are up, banks are up. We've got, you know, stocks like Deere and Caterpillar both trading higher. They're buying the value trade. The value trade is on here this morning. I don't know if that continues. Maybe it just, you know, goes into everything. We'll see. But right now, value holding up this market.
All right, U.S. initial jobless claims coming in at 228,000 versus the 242,000 estimate prior, 237,000. So going lower, right? Light report here, not a hot report. Also, we got their Philly manufacturing to come in here for July. It came in at a negative 13.5 versus a negative 10 estimate, prior being negative 13.7 there. And let's go back to kind of stocks that you were mentioning there. Deere is one that I've had since 401. Had to sell some yesterday. I want to see if this can keep running. These industrials have been kind of getting that nice little lift. Caterpillar, Paccar, all these kind of going higher. XLI, just completely just trying to get towards the next levels. We'll look to see if this can keep pushing. Now, I did see some areas in industrials weak yesterday that I'm looking after, like Boeing has been pulling back, Lockheed Martin. So the defensive names haven't been doing that great. So I'm going to see if those turn around, because if not, we could start seeing a little bit of a drag there also. Let's go back to all of those earnings reports. We got so much to go through today. I'm going to try to keep us rolling here. Sure. Let's go to IBM, International Business Machines here, as they reported earnings. EPS there at $2.18, beat the $2.01 estimate. Sales of $15.47 billion, missed the $15.57 billion estimate. They did talk about AI in their earnings call, but really, we're just not seeing the lift that I think we should see.
It just can't get the story going here. I have sold half of my original IBM position. I've still got half of it, but I look at it and just think, I don't know why I'm in this, you know, and it's right where I bought it. I bought it at 135 months ago. I kept thinking this was going to catch an AI story, and it just has not. And if it couldn't catch the AI story when we've been in this AI bubble, that's trouble. So, but with that being said, it's a value market right now. You know, the value stocks have come back a little bit. I wouldn't be surprised if this stock actually doesn't look bad on the charts. I mean, we've been consolidating here. We kind of look like we're trying to go higher. Maybe we can get up there to that 139. It's a very important day for it because it did report earnings here last night. You don't want to see this thing start to leak off the earnings report. But I feel like we're in the value market at least here today. So that bodes well for IBM.
All right. I know that you probably caught yesterday as Apple got that spike yesterday. What a spike off of mentioning that there was news of internal AI language model developments. And
oh my gosh, Apple's
did
got
you really?
AI.
Yeah, exactly, Dennis. Like when I saw this mention, I was like, did you really think Apple was not going to be a major leader in AI?
It's just the way this market is, Mitch. This market is just like it. Like I've joked before, it's the market that really prices in nothing. You think it's priced in, it's not priced in.
Yeah,
and
man.
You know, it just continues every time we get a positive AI headline, whether it be from Meta, Microsoft, Apple, they jack it. It's because we're algorithmic driven. The algos are so fast. They see AI headline, it just equals buy. It's a simple formula. They got a one-liner in there. AI mention equals buy. That's the algos just driving the price. And then it comes back down because human beings say, we know AI is an Apple. And that's why it came back down right away afterwards. But the algos don't know. There's money to just be made fading. A lot of algorithmic traders are just, you know, there's a lot of algorithmic traders, like I've said, the Citadels and the Virtus that are awesome. You know, they're market making machines. They've got it figured out. They've been, you know, using obviously, you know, automation for a long time. And then you've got a lot of algorithmic traders that are newer to the game and trying to figure it out and trying to find edges and stuff. those are the ones that sometimes you can fade, and sometimes they cause overshoots, and they just see earnings beat buy, but they don't consider the fact that the stock's been running up into the earnings reports. So not all algos are the same. Not all algos are smart. So in any regard, Apple being up 4 points initially on that AI mention was probably over exuberance in the short term, especially coming up to that 200 area, and it pulled back.
Is this a negative for Google and Microsoft that were viewed as such leaders in AI?
I still worry about Google, and it's a reason that I sold my Google was that they are basically search. Google is search. And if we start seeing people using AI for search, if we start seeing, Microsoft take a little bit of that share, it is a concern, because that's really what a lot of these companies are trying, well, at least Microsoft is trying to do. It's trying to eat some of Google's lunch. It doesn't need to eat all of it. It just wants a few bites. And Google's pretty much had the entire sandwich here for the better part of 20 years, maybe 30 years, really since the basic, 20 years, I guess. So going back to the birth of the internet, we used to search on Yahoo. We used to search on Excite and Lycos, if you remember all those. And Google came and just perfected the search engine, and that's history. They basically are a monopoly in search. They're trying to break that monopoly. And if Bing can do it, if Microsoft can do it, that's bad news for Google. So throw the AI story out of Google just for a minute, like just saying other things being equal, because there is an AI story on Google as well. That's why I think Google's performance is lagging to a certain extent, because there is portfolio managers worried that Microsoft and potentially other suitors can come in and start eating Google's lunch. I don't know if I'm that worried about it, because Google's going to be a big player in AI too. They're going to have their products. We know that. The valuation is much more reasonable in a Google. I think it was 22 times earnings the last time I looked at it, 23. But there's a reason you're paying that premium for Microsoft, and that's because they think Microsoft can eat some of Google's lunch.
All right, let's keep going. Let's go to the airlines now. We'll go to, of course, American Airlines, and also we got another one reporting. Can you hear it now?
Holy,
as the planes are coming in here, as United Airlines and American Airlines reporting here. Let's go to American first. Q2 adjusted EPS at $1.92, beat the 158 estimate. Sales of 14.1 billion, beat the 13.74 billion estimate. American did raise their fiscal 23 year outlook on EPS guidance to $3.75 versus a $3.08 estimate. And then let's go also and give UAL numbers here, as Q2 EPS at $5.03 beats the $4.03 estimate. Sales of 14.18 billion beat the 13.91 billion estimate. They still gave that fiscal year 23 EPS outlook at $11 and $12 versus a $9.73 estimate. So United Airlines trading higher after the company reported better than expected Q2 results and issued strong fiscal 23 guidance. We've got this from the very beginning. Seems like somebody's not listening.
We've been, talking about this airline trade ever since you came back from your cruise. The date of that. It was back in, I believe it was May. And I mean, we talked about airlines and everything being busy and just, firing on all cylinders. American Airlines is now broken out. UAL, we were talking about this back when it was $44 and started to show some life. And we're like, valuation on this, if they can hit these numbers, is ridiculously cheap. Delta, same story. These stocks are still ridiculously cheap on valuation. The problem is the earnings are cyclical. So if you do go into a downturn, those earnings can go red. With that being said, if we stay in, an expansion, if we don't have, a recession coming, the airlines could continue to go higher here because the valuations are very reasonable.
And the outlooks, right? I mean, they've been giving these guidance since the beginning of the year. It's almost like we weren't listening because everyone wanted to talk about recession at that time when they should have been looking at what the actual airlines were telling us. They were telling us they were going to kill it this year.
Well, they flat out, if you, like I joked, or I didn't even say, I wasn't joking. I said the Delta CEO has been on CNBC multiple times telling how much he's killing it, how much they're killing it. And I mean, if we just take what they were saying at face value, when he started coming on, it was 35, then it was 40, then it was 45, then it was almost $50, and then it was just overdone. And that's why it sold off on the good earnings report. That Delta report was good, even though the stock sold off on it. And now it's starting to crawl its way back because investors are realizing that, hey, these airlines are doing really well.
All right, let's keep going. We'll get out of the airlines. We're going to keep it moving here today. So you guys out there, smash a like for us going through as many topics as we can for you guys today. Let's go to TSM. Taiwan Semiconductor is actually down here after they beat. And when you look at their expected Q3 revenue, that's when you start seeing things get hit here. 16.7 billion to 17.5 versus an estimate of 17.68 billion. So TSM starting to take a little bit of a leak back down. I don't know why I would want to have TSM personally.
Again, me and you, Mitch, have just been scared of it because we don't know the geopolitical risk.
Yeah, but there's also not such positive outlook either, Dennis. You get what I mean? Like, why would I want to own this? This has really gone nowhere.
Well, it's gone a long way since May. I mean, the reason it's been hauled back is the geopolitical risk. There's a reason this stock is way off its 52-week, well, not 52-week high. It's close to its 52-week high, but reason it's way off 2022 highs. And that main reason is the geopolitical risk. Investors are scared. It's the same thing with China stocks. It's why Alibaba trades like 8 times earnings, because investors are scared of the geopolitical risk between China and Taiwan. And that's not off the table. It just keeps, not getting mentioned. It's the boogeyman in the room. It's the elephant in the room, whatever you want to call it. But that's why these stocks continue to underperform. No other reason. If it was US Semiconductor, the same company, I do not think it would be. I think it would be a lot higher. What's Taiwan Semiconductor PE? Let's go look. Get exercise here, because I think it's quite a bit lower. Let's go grab it.
Yeah, I think
it's a race. We're in the Benzinga Pro. We're going to the
20.28 forward outlook right now.
Yeah, 16 current. 20 forward, so they must think that the cyclical, the earnings are going to drop there a little bit because it's 16 current. But I mean, when you think about, the semiconductors, a lot of them are 25, some of them are cheaper too. So whereas, we can just go, we know Nvidia's and the AMDs, where's the applied materials? Applied materials, 18 times earnings. Micron, which is very cyclical. I own Micron, full disclosure. It's 192 times earnings. They're not even making money right now. They're at the bottom of the cycle right now. You got the Lam Research. I'm just grabbing 24 times forward earnings. So I guess you're in there on the Taiwan Semiconductor. It's in there, but I still think like that geopolitical risk keeps me away. But does dip get bought today? Probably.
Yeah, one thing that I think about in the long run is I see so many of the major names trying to make their own chips that in the long run, I think TSM just starts getting a hit on that. Let's keep going. Let's get out of Taiwan Semiconductor. Let's go to
What about Intel?
Intel?
What about Intel? Because we're getting a downgrade here today. And in this Intel, just before we leave, this Intel, obviously, and I don't own it. I've thought about rebuying it. I got called away in the last quarter, and it's actually good it got called away because it fell straight after I got called away. That was the top when it was over $36. 33.77. This morning, it is down 2% here. We are getting a downgrade on a very tough note here. It's actually not a downgrade. Sorry, it's Wolf's initiating at an underperform with a price target of 27. And in that note, I had just read the headline, but I'm going to go grab it because there was some. It says, where is it? I can't find it here now, the note. But I'm going from my memory, so I may be wrong, but I'm going from the memory of the headline. But it was something like, there's no real good path to profitability in the near future. I mean, I didn't even realize Intel was losing money. So I thought that they were still making money, but maybe I'm wrong about that. Let's go look at the last quarter. When did Intel do? Intel, it's been a long time since they've reported.
Yeah, negative.
Yeah.
Negative.
And then, so Wolf's saying they ain't coming profitable anytime soon. It's crazy to think about how much money, like the Nvidias have been making and turning it around. And then you got Intel, which always was making money, trading with a 9 or 10 PE, and now it's not even profitable. I mean, wow, what a mess of a company this has been. The leader in chips, the leader Intel inside for decades, it felt like, and just AMD and Nvidia have just come and just murdered them. And they can't find their way here now. Nobody wants an Intel processor. I bought one because I'm old school, and I bought one, and I wish I would have went AMD or Nvidia. And I'm sure the Nvidia chip is still in here because I think, I don't even think that they, on these PCs, they don't even have all the bone inside anymore anyway. So, but, that's a tough note. With that being said, We're in a value market. Is Intel still a value stock if it's not making money? I don't know. It's tough to say. Do you think the dip gets bought here, Mitch?
I think it's going to be more about the sideways action that we're running into a little bit. Do I think Intel's going back to, let's say, 25? No, but I think it could hang out here in the 30s and the 35 area for a while before we get out of this kind of area right now. And I do expect to see sideways action in the markets. That's what I would expect to see up here, because I think that we are definitely in a bull market. I don't expect things turning around too fast, but I also could expect to see some kind of up and down action here on Intel. One thing, the point that you're clearly pointing also is from 2021, October 21st. So it went from an EPS at $1.71, which was a good surprise because the estimate there was 1.1. It went from 1.71 the next quarter, 1.09, 0.87, 0.29.
Can we show this?
0.59. Yeah,
where are
I
you
can
reading
show
this
this.
from?
I got you. Just from the pro, but it's on my other screen.
Bring
Just
it
give me
up.
a second here.
We don't give the pro enough love here on this show. I want to start showing the pro more here because
Yeah, I got you. I got
there's
it right
so
here
much
for you guys.
history information. This is why the pro is just a good fundamental tool too. I mean, it's
Yeah.
great to get the headlines, great to get the current information here, but to keep such a log data of all of this so you can see the trends, you can go in there and jump in and maybe, make it a little bigger for us who have bad eyes jumping in here. But you look at the current. When is the last time they lost money? Like going back, how many years do you got to go back to see Intel losing money?
I don't see them losing money.
They don't have it.
So all the way back to 2012. It was the first quarter.
This is the first quarter they've lost money here in 10 years.
Yeah, and
then Wolf's saying they don't see them getting back to profitability anytime soon. That's concerning.
Yep. And then you can clearly see that, right? The 171, it goes to 109, it goes to 0.87, and then now we're just into the negatives. And the estimates also just going down too, right? 0.9, 0.8, 0.6, 3, 2, 1. Not what you want to be seeing in the estimates either. So the analysts themselves also are clearly seeing it too, that the writing's on the wall here in Intel. I've said it before. The only thing that turned Intel a little bit around for me was that mention with Nvidia. So if you want to get sexy, Intel, you better keep doing some partnerships with some bigger companies, because if not, I think the writing's on the wall here for Intel.
That's the problem, is like you always argued it and we've argued it, it's 9-10 times earnings. How can you go wrong? Well, you go wrong when the earnings are in decline. And now all of a sudden you're looking at negative earnings and an infinite PE. And Wolf's saying they're not getting back to profitability anytime soon, which scares the hell out of me. It scares me away from jumping in here with, saying, hey, 10 times earnings, let's go. Well, it's not that anymore. And that trend in earnings is very frightening as an investor to see that. You want to see, bring up, so let's do an exercise. Bring up Nvidia earnings. Do the same thing, the exercise here from Nvidia as well. And obviously Nvidia's had some stock splits in there too. So, maybe, it's not hard to compare apples and apples because of the splits. But if you bring up that earnings trend, and if you could back out the splits, which I don't know if it does, it probably doesn't, but, look at the earnings here. So jump and look at these trends.
Yeah, and you can see it.
Make it a little bigger. I am blind, Mitch.
Yeah, I got you. It just always zooms out a little bit there.
Yeah, that's good.
All right, so you can clearly see here on the estimates, they're actually getting a little bit of a jump from in 2021, around the same time, we were at 1.1. Then we went to 1.2, 1.29, 1.25.
Then we had the recession in there a little bit.
Then we got a little bit of a hit there.
Slow down.
Right? Slow down in 2022. But
look at the next estimate.
Exactly. It went right back to 0.8, 0.92. And then look what we're going to.
205 looking for the next quarter.
205, man. Yeah, let's
double it. There's a new high. New highs.
Yeah, let's double it. And the estimated EPS, you can see it's never gone into the twos. Yeah. Now we're looking at the twos for the estimated EPS here. So what does that show you? Making a lot more money.
So we can argue, and some people have argued that, Nvidia completely disconnected from fundamentals, but we just reconnected it. We just reconnected these two stories just looking at that EPS.
That's why I say,
should it be, 70 times earnings? Maybe not. But if that EPS number continues to grow in the way it is, maybe eventually it does grow into this valuation. I mean, if they make, let's just say hypothetically, they make, you'd have to make
that's the question you need to ask yourself, right? Is the AI truly affecting the bottom line? In Nvidia, we can clearly see that it's affecting the bottom line. In Intel, it's not. And I think that that's what we need to be watching in the reports. Is the AI truly affecting the bottom line, or is it just story?
It
'Cause
looks
if
like
it's
it's affecting the
story,
bottom line to me.
yeah. If it's story, then you got to be careful, right? But if it's actually giving them the revenue boost, those are the companies I want. So that's what we should be looking underneath the hood. Let's keep going. Let's go to Johnson and Johnson. I think this is definitely a report we got to touch here. Q2 adjusted EPS at $2.80, beats at $2.62. Sales at 25.53, beat the 24.63 billion estimate. They revised fiscal 23 adjusted EPS guidance to $10.70 and $10.80 versus the prior of $10.60 and $10.70. What do you think here on
J&J was getting a lift. I was like, I had to mark what I just said because I looked at it and it was trading higher here about an hour ago, and now it's trading back down. So as much as you've got the underneath demand and tech and AI stories here, the J&J is defensive, 3% dividend. We got that talc issue that I was talking about from yesterday, which spooks me. Again, we don't know. Maybe the settlement's going to be fine. Johnson & Johnson saying this, person who got $18 million in California from the talc is not going to settle. It's not going to affect the overall settlement. But like me and Mitch were pointing out, you want to take 200 grand. We just saw somebody get 18 mil. I mean, that makes me think twice. So I think it does affect it. The stock was down $3 on it yesterday, bounced back because they buy the dip and everything. But I'm concerned about it now as well. And I think the market was concerned about it yesterday, rightfully so. So I think there's now that underlying risk that, hey, this talcum powder issue may not just be going away as quickly as we thought it was going away a couple of months ago here. So with that too, it's not the kind of stock that's going to run in a risk-on environment. Johnson & Johnson's risk-off stock. If you get a market that tech stocks start to roll over, J&J actually can move higher. J&J often, I trade it against the S&P. What does that mean? It means it often moves the other way. It moves like against tech stocks. So one thing going for it this morning is that I'm actually surprised it's going weak here too, because tech is relatively weak. So you'd think, I'm seeing like stocks like Pepsi and Coke and, the defensive names going up here. So it's somewhat surprising that Johnson & Johnson has went red, but not good news if you're bullish J&J, because one, you had a pretty good day for them to report on a tech wreck day. And then two is, I didn't look. What was the numbers? Let's just go through them once again here, Mitch, because I was half listening on the numbers. I zone out 280, 262. Yeah. So they beat. And the guidance was somewhat revised, but somewhat in there. So, I mean, this report was
it's
fine.
not bad. The report is fine. It's just worries about more lawsuits coming now.
I think so. I think that's going to weigh on it.
It's more.
I think that's going to weigh on it.
And maybe it doesn't really affect the actual overall company, like market cap wise, but I think it will affect the sentiment towards the stock, and just that alone might bring it back down, right? I'm not liking Johnson & Johnson here, and overall, healthcare is really not the place that I'm looking at anymore. There's other areas that I'm looking at.
I don't see any reason to, I don't see like, oh my gosh, let's jump in this. The AI story is there.
Yeah, I'm not seeing it.
All the stocks, if you look at what I have bought, and just for the exercise, let's go bring up my long-term portfolio right now, and I'll just read you the stocks that I've bought here over the course, and you can see what I've been doing. And obviously, I have a lot of cash. We know that. I still have a lot of cash. Cash ain't that bad, making 5.5% or 5%. It's not that bad. It's not like zero like it used to be. But I just keep arguing, why do I want to own Johnson & Johnson? I would sell my Johnson & Johnson and buy T-bills right now, because why take market risk to try to pick up whatever you're risking? And then you got the talcum powder issue, and you have all that as well. If I'm buying stocks, and I have been buying stocks, it's almost always, if I look at my transaction history, I'm just going to go through, the long-term investments that I've recently bought here. And, and ones that Generac, which is a value stock. We got that Generac and Microchip. I bought both of those. Those were Marc Chaikin plays, and Marc's been hot as hell. So I was like just kind of going with him. So I have both of those in the long-term portfolio. I had a sauna in there, and then I just spooked out of it. I was only in there a few days, and I was like, it doesn't really, it's not profitable. So I'm like, I thought, it's like the tech trade going, and this one CEO buys the stock every single day. So I kind of had it in the back of my mind, but then I talked myself out of it. So I put it in there for like 2 days, and I was like, I can't stomach a sauna. Just continuing on here on the recent ones that I've bought here. I bought this new, and my long-term portfolio is in BMO Investor Line, and they changed the whole damn site. I can't even like figure out how to get my transactions up here. IBM I sold, Disney I sold. So I had Disney for a little bit in there and I sold it. I'm just looking, that I had some sales in there. I'm trying to see which other ones that I bought though. So I got to go further back. How do I go further back? Oh, here it is. Last 30 days. We're going to go to the current year now. Okay, so now I was only the last month. So I hadn't bought that much in the last month. But before that, I bought some Micron in the long-term portfolio. I still have that. I bought, continuing down. Sorry, I should have been more
you're
prepared
good.
for
You're
this.
good, man.
Salesforce.com was the one I bought before that. That was back on June the 1st. Yeah, I bought June the 1st. I bought Salesforce.com at $211.60. Upwork I bought. I had that in there for a bit. Remember we had the Upwork? And I've sold out of that now. So Upwork was a good one though, EUPWK. So I've already sold that one. I was in that for a couple of months. General Motors I bought $33.80. I bought General Motors back on May the 10th. That's been a good one. I've sold half of that one. Airbnb I still have. I bought May the 10th. I bought it at $100 a share, or 110. That's been a really good one. It's 145.
I'm
But
mad
you can
at
see
you
the
on that
trend
one,
here.
Dennis.
Like a lot of these stocks are techie. A lot of them have something to do. Albemarle, ALB. I was talking about this one for a long time when it got under 200. I bought more at 184.
Not a bad one, man.
That's 232. I bought Square at $61.
You still got that thing?
Up. No, I sold it. Where did I sell? I sold the Square right before the run too. I finally got fed up with it, and it was a good trade. But I didn't get this again. Take the first bite and don't leave the meat on the bone. Again, getting talked myself out of it from a valuation standpoint. The ones that have like the low PEs, I tend to hold those better. The ones that have the high PEs, I'm like I'm not nearly as good at those. So that's pretty much I'd bought some Oxy back. We go back PXD I'd bought, which is an oil stock. But so I'm kind of all over the place to a certain extent, but at the same time, and the other one that the other one I just bought, I haven't decided if it's going to be a day trader or not yet because I just put it in there, so I'm not going to talk about that one yet.
Manvic in the chat, there's plenty of places right now offering 5%. You don't need to only go to treasuries. I even saw, I think, Robinhood offering 5%. Man, there's so many places to get.
Is Robinhood giving 5% now?
Yeah, I think Robinhood's giving 5%.
Holy!
I mean, come
that's
on,
impressive. Seriously?
Just sit money in a brokerage account and make 5%.
Well, I do that.
I mean, why not?
So obviously, Interactive Brokers. We know I traded Interactive Brokers there, and I think last time I looked, it was 4.6%. So if I'm not, some days I usually margin out, but if I'm not margined out, some days I get extra money on my, on my holdings, and it's extra cash. So I do that intentionally. I'm like, I move the money over there, and you just sit it there on your Interactive Brokers account there, just collecting extra money. It's funny because I post my returns every month, and it's holding me back a little bit on my returns because I've got, I've put more money in there than I really need right now for trading. And it's because I'm getting that 4.6%. So I get it over there right away, even though I'm not always trading with it. So, and sometimes I do margin out and sometimes I trade with it all. But a lot of nights I'm not really using as much of it. And it's actually affecting my overall performance because I've got it, cooking, whatever money I'm not using is 4.6%. But a lot of nights I do use most of it though.
Crassy giving the numbers from both here, and I saw a lot of mentions in the chat, so I just want to correct there. It looks like Robinhood's 4.6, Weeble's doing the 5.
Somebody said Robinhood's doing 5.5, Weeble, so they're all doing it now.
Exactly.
This is money moving over there.
This is why the regional
good question
banks
on
is
insurance too.
Still.
And a good question on insurance at these brokerages too, Mitch. I think you got to look and you got to read the fine print there. In Canada, it's different than the U.S. I believe your insurance is just over. Last time I looked, I thought it was $1,099,000. So on a brokerage account that you're insured for and this is Canada. I thought somebody had said it was only like 600 grand in the US. I'm not sure though, because I'm Canadian. I'm fully in Canada. I'm with IBKR Canada. So it's different, but I think it's like 1.1 million if I'm not mistaken. So if you've got over that, there is a risk if Interactive Brokers goes down. But with IBKR trading at $81 a share, I'm not too worried about IBKR failing at the moment. If we go into a financial crisis, and IBKR goes down to $10, maybe I'll start thinking about that. I'm not too worried about my brokerage failing at this point in time. back to 3 months ago, certain brokerages, we were worried about them a little bit more. But that's just not the case right now.
Yeah, we'll see what happens. Robinhood has been moving. I agree, Bug. I think a lot of people are starting to underestimate Robinhood as it starts to go a little bit higher and keep climbing.
They got a lot of accounts.
Yeah, a lot of accounts, and I'm waiting for
I've
somebody
said before
to come
that
in and take it,
Robinhood
right?
could at a certain valuation. I'm not sure if it's at the valuation it's at now, but I've argued before that people were saying Robinhood's a zero. I've argued before, if this goes down to a certain price, you could have a big brokerage houses come out and scoop it up because they have a lot of accounts. That's a lot of information. That's a lot, valuable to a lot of big brokerage houses. So I don't think Robinhood is a zero. And it's coming back with everything else coming back. I don't know, at $13, the valuation might still be a little bit stretched. The $85, all-time high was just stupid. That was 2020 when everybody was just dumb. $13, when it got down to $6, $7, $8, probably getting into maybe a little more value territory. But I don't think, has Robinhood ever really made money? Is this company, go to that earnings, do the same exercise here, Mitch, and then we'll finish with that. I'm just curious, when you bring up the EPS, go to your Benzinga Pro, do that same, and show us how you do that. Bring up the Pro, because we have a lot of Pro users in there. Show us exactly how you do that. So,
all right, so the easiest way is just look up the ticker, whatever you're looking at, right?
Look up the ticker
right there. You're going to hit the calendar. Then you're going to look at all the different things that you have. You'll look at earnings here, and then just look at the EPS, right? That's going to give you the easiest outlook.
Never made money.
And you can see here in 2021, they made the slightest bit.
Oh, they did.
The slightest bit there. And then now, since then, they've just been on a little bit of a negative
been burning
trend.
cash. Do they get back to profitability here? Well, I mean, the next quarter only losing 2 cents. That's a good trend. So the trend, I would say absolutely the trend is your friend here to a certain extent. When you money, Mitch, I mean, you're losing $1.
Exactly. And you know what's another thing that helps it, Dennis?
14.
You know what helps it?
What?
A bull market, baby.
It does, because it gets people interested in the market again. What has hurt a lot of these retail brokers the most is the bear market of 2021 and of 2021 and 2022. It's been full bull in 2023, and that does help these companies. So I agree with you 100%, Money Mitch.
Yeah, man. When the cab drivers start talking about the market again, that's probably when you want to be watching.
Usually when you want to sell. What kind of stock you like there, Money Mitch?
Hey, it's how it goes, guys.
Hey, good call on the laser yesterday, though. Those sharks with lasers on them. Luminar. Dennis. You called it out at 7.23 yesterday. That thing went up like 50 cents yesterday on $7 stock. So it was up 7 or 8%. Good call on that one, Mr. Money Mitch.
Yeah, that's why I'm swing trading it, man. Come on, you know me.
Are you in it?
Hell yeah, man.
Nice. This Money Mitch.
Yeah, I grabbed it yesterday.
I follow this guy.
I have it. I'm looking good. I'm a little down on it. It's on the swing, at least.
Oh, you've been in it
a little later. But we'll see if this starts to take off. I had QS for a while too. That one did a really good move. QuantumScape. We'll see if solid state batteries.
It's still short squeeze season.
Yeah.
Carvana. Well, look, Carvana went red here. It was up 58, 59 this morning.
Yeah, I wanted to talk about Carvana, but you know how it is. We try to get to everything here. But Carvana's huge squeeze yesterday.
Oh,
man. I mean,
eventually I was choking on it. I didn't even have any shares.
Yeah. I think it could maybe come back and try to maybe to hit that low yesterday, maybe 47.10. So just be careful out there, guys. That was a pretty fast move there, and coming down already in the pre-market here. Last kind of news dimensions, I do want to kind of mention them at least. Looks like regional banks are starting to get the lift. Fifth Third Bancorp, not bad earnings there. Discover missing on their earnings.
We missed Discover. This is a hellish quarter, and they had like something else in there about accounting issues. Remember Kramer, accounting issues equals sell? That's a good rule of thumb. When you start hearing, about accounting issues from like a long time ago, like, I don't know if this might be an overshoot on Discover, but this is your disaster stock of the day. I started watching this thing go down. It was 121, then it was 118, then it was 115. I was like, oh, that's a pretty good hit. Then it was 110, and I'm like, what is going on here? Now it's 105. I mean, this thing has just continued to leak here. It gave back its entire last 45 days of gains, gone, poof, one day. Man, you got to think there's dip buyers in here, but I don't know what these, I haven't looked at the details on this accounting stuff, but obviously accounting issues, and the algos just sell first and ask questions later.
Yeah, this one seems to me like it has 100 written all over it. Is it going to happen now? No, but I think it's leaking back down towards monthly supports right below 100. We'll see what happens there on DFS. Last dimensions, there is some mentions there with Catalent, so you can take a look at that. Elliott investment coming into there. And for all the Brave fans out there, take a look at BATRA. That's the new spinoff here for the Atlanta Braves holding.
Is that your team?
No, not really my team, Dennis. I'm
Who's
more
your
of a
team?
Rays. I'm a Tampa Rays fan.
You're the Rays.
Tampa Bay Rays fan. I used to be a big Marlins fan, but they sold the team too much, and then it made me a hater. But we'll see what happens. The Atlanta
Braves publicly trade them.
Publicly trade them.
So if they win, the night before, then you buy the stock. If they lose the night before, then you short the stock. Is that how you trade these things? That's a joke.
I'll tell you one thing, though. At least one thing to look at in that is that the Braves do own their stadium, which is a plus. There's so many teams that don't own their stadium.
Yeah.
So that's something to think about. They do have some land developments that are going on outside of the stadium that could, in the long run, increase the revenue here. So look out for it. There's a reason why they split off from Liberty Media Corporation, is because they weren't going to be viewed as positive if they stayed there. So I'm going to keep an eye on this. This is a smaller name, of course, but we'll see what happens there. That's do it for us today here on Pre-Market Prep. Like always, you guys can keep up with Dennis Dick, Triple D Trader. I'm going to go ahead and hop us to live trading now. Like always, Dennis, go do what you do best, my friend.
We'll see you guys.
To the trading action. All right, that's going to do it for me today, guys. Sorry about the camera issues. I'm going to try to get it fixed for live trading, but if not, I'll just keep it like this. You'll still get audio from me. I don't know what's going on with my Canon. I think it just is like the external battery that I use, but I'll try to pull it out and get that ready for live trading. Come up next here, you guys will get live trading, and then a little bit later today, of course, don't miss me on Start Swing Trade. I've been doing pretty good in the swing trade life. Deer has been the best position for me as of late. We'll look to see if that can keep going. You know how good I'm doing on Deer, guys? I think I'm up like over 35 points on Deer now. Where are we at? 37? Oh, 36 points. My bad. A little bit off there. Well, come find out about that Deer position. Come find out about what positions I get into today on live trading. Of course, we got Lord Ryan and myself on that show, and I'll see you guys over in just a couple seconds.